This is OwlUp, where learning happens in minutes, not hours. For a deeper journey, explore all our courses at owlup.co. Now, let's dive in. Chapter 1 of Accounting for Humans, Business Numbers Made Easy. Why Numbers Matter. An Introduction to Financial Literacy. Let's dive in. About half of adults in wealthy countries can't answer 3 basic money questions correctly. Now drop that person into a boardroom. Investors ask about profit, cash, and debt. They freeze. Here's the twist. The numbers were screaming the answers the whole time. Most people treat financial statements like terms and conditions. They click past them and hope nothing explodes. But in a business, the "I'll wing it" approach is exactly what shows up later as surprise layoffs, emergency loans, or that sinking feeling when your card gets declined on payroll day. Financial literacy isn't about turning you into an accountant. It's about translating daily decisions into numbers you can read. When you discount a product, delay a hire, negotiate payment terms, or sign a lease, you're quietly editing 3 documents that investors and lenders treat as the official story of your judgment. Here's the catch. Those documents get written whether you understand them or not. The only question is whether you're the author or just a character in someone else's report. Most leaders don't decide to ignore their numbers. They just slowly drift away from them. A busy week turns into a busy quarter, and suddenly the only time they look at reports is right before a board meeting or a crisis. Meanwhile, those same reports quietly record every choice: generous refund policies, optimistic hiring, loose payment terms. Think of how a chef scans tickets in the kitchen, not to admire them, but to time each dish, spot bottlenecks, and adjust on the fly. Your income statement, balance sheet, and cash flow report can play that role if you're willing to look often enough. Here's the uncomfortable pattern behind a lot of sudden business failures. The story is visible in the numbers months, sometimes years, before anything blows up. Revenue slows before layoffs. Margins compress before frantic fundraising. Cash tightens before the unexpected shutdown email. That's why the gap isn't just between knowing and not knowing numbers. It's between 3 levels of fluency. Level 1, avoidance. You see reports as a chore. You glance at the bottom line, shrug, and go back to putting out fires. Level 2, compliance. You produce statements because banks, investors, or tax authorities demand them. You read the highlights, maybe a few ratios, and move on. Level 3, navigation. You treat the reports as instruments, things you use to change direction, not just describe what already happened. The research gap sits right between levels 2 and 3. Plenty of businesses technically have their books done. Far fewer use those books to change decisions this week. That's why monthly statements matter so much. The companies in that 50% faster growth bucket aren't just closing their books more often, they're running more experiments per year. They adjust prices sooner, trim unproductive spend faster, and spot product lines that quietly turned unprofitable while no one was looking. Think about a hiring decision. At level 1, you hire because everyone's busy. At level 2, you check whether you can afford the salary. At level 3, you look at unit economics, forecast how the role changes customer acquisition or retention, and decide if the hire strengthens or weakens your runway. The underlying decision looks similar from the outside. A new teammate joins, but the risk profile is completely different. The same is true for fundraising. Founders without numerical fluency pitch a vision. Founders with it pitch a machine. Here's how $1 of capital enters, moves through, and exits our system, with evidence from our own statements. Investors know the difference in the first 5 minutes. The point isn't perfection. The point is shortening the distance between something changed in the business and I can see it and respond to it in the numbers. Every month you shrink that distance, you lower the odds that your next big surprise is the bad kind. A founder I worked with thought knowing the numbers meant checking whether there was money in the bank. When we first dug into their reports, we found one product line that looked popular but quietly lost $12 on every sale after support, discounts, and shipping. Nobody had ever lined those costs up in one place. Killing that product felt scary. 6 months later, it freed enough cash to fund a higher margin offer that became 40% of their revenue. Another team discovered that customers paying annually weren't nicer, they were a different unit economics story. Same product, similar churn, radically different cash timing. That single insight bought them 9 months of runway without a single investor meeting. This is the practical payoff of numerical fluency. You start asking sharper questions. Which customer segment actually funds your experiments? Which small expense grows exactly as fast as your sales? Which channel looks good in volume but bad in contribution? The statements don't give you the strategy, but they keep you honest about it. As tools automate more bookkeeping, the real edge shifts to interpretation. Who can read changes early and act before others? Think of it as moving from following GPS to reading the terrain yourself. Tomorrow's dashboards will mix classic metrics with signals like customer trust, carbon impact, or AI risk. The leaders will be the ones who can connect those dots into decisions, not just prettier reports. Your challenge this week: just once, sit with your latest numbers and write down 3 decisions you'd change if they had to be justified only by what's on those pages. No story, no vibes, just the trail the numbers already drew. Then pick one of those decisions and run a tiny, low-risk experiment that reflects what the data is telling you, even if it contradicts your instinct. Numbers won't tell you what to want, but they'll show you what your current choices are really buying: time, options, or trouble. Treat them less like a school test and more like a sketchbook. Some lines get erased, some become the blueprint. The more often you look, the faster you notice which strokes are turning your idea into something that can last. Start with this tiny habit. When you open your banking app to quickly check your balance, like you already do, say out loud one number you see. For example, my grocery spending this week is $42, and what it means to you. That's halfway to my $80 budget. Then, tap the Transactions tab and circle with your finger on the screen the single category that showed up the most today, like food delivery or coffee. Finally, whisper a quick plus or minus judgment about that category. Coffee, plus, worth it, or delivery, minus, need to cool it, and you're done. This was OwlUp, your daily step forward. To keep learning with structured courses and more insights, go to owlup.co. Until tomorrow!